welcome to this webinar on social trading with me, David Jones, and Ayondo Markets. If you're watching the recorded version of this, it was held live on Tuesday, May the 16th at 7:30 in the evening. So I do a few webinars with Ayondo during the month. Every Wednesday lunchtime at 12:30, we do a webinar looking ahead to sort of big levels and trends to look out for in a mix of markets, currencies, commodities, indices, that sort of thing. But this webinar that we do once a month is looking at the idea of social trading, where you can copy and follow other traders. I've been blogging about it a bit on my website. If you go to the website tradeafter.com, I set up an account just over, I think it was a few months ago now, and I think you can, 3 months ago, so you can see a snapshot there, a live account where I put a couple of £1,000 in, and I think so far it's up about 5% over the last few months, and I sort of explain it in a bit more detail, a step-by-step approach to social trading. So we're gonna cram all of that into this webinar over the next sort of 20-25 minutes or so. The idea behind social trading is easy enough. You know, what we're looking at doing, rather than maybe trying to find opportunities ourselves, you know, do we buy the euro, do we sell gold? It's looking at what is effectively a league table of other traders, choosing to follow those traders, and then sizing the risk correctly to the right sort of level, and having their trades automatically carried out on our account. So rather than, I think, to use a football analogy, rather than trying to be the star striker, what we actually want to try and be is the star manager, so a great manager of traders to pick people to follow. But let's get into it straight away, and I'll show you the sort of thing I mean when I talk about this league table idea. Here we go. So on what I've got here, I'm on the Ayondo website, and I've got a list of traders I can follow. So there are a bunch of people who trade with Ayondo who make their track records available to be seen, and if you want, you can choose to follow those traders. Okay, so what it means is if you followed somebody, every trade they do gets carried out on your account automatically. So I've got a bunch here. What I've done, I've sorted them by, first of all, the one filter I've applied here is real money traders. So there are people who trade on what is effectively a demo account, so paper trading. They make their track records available to be seen. And if I flip that off, you'll see there's 1,051 traders to choose from. But for me, my view is, well, if I'm going to follow these people with my own real money, then I want them to be trading with their real money. So that's why I've got this thing clicked in here, this button clicked in here, RMT, real money traders. And then I've sorted it by P&L. So this is over the last 12 months. We'll drill down to some shorter term ones as we go through. But this is the last 12 months, and you can see the best performer is this one up here, Votan. So it's turned in a return of 103%, so doubled their account over a 12-month period. Second best one has made a 73% return. Joki, this one here, has made 56%, and so it goes on. So out of the top 10, it ranges from a return of 103% down to just over 33%. But that's a good place to start from, because clearly what we want are traders who are profitable. I don't want to follow somebody who's lost money over the last 12 months. I want somebody who's got a good track record. So this is normally where I start from. But then I think we want to see a bit more information than that, because I'm sure if you've ever done any trading yourself, you can take a massive level of risk month in and out and maybe get lucky and double your account or treble your account in short order. But the risk is, of course, that you end up blowing your account up and losing it all. So the next important figure for me on here is this one here, max DD, and that means maximum drawdown. So when they've been trading, how much of their open profits, or that's how much of their realized profits, have they given back in the pursuit of more profits? Because as we all know, if you start with, let's say you start with £1,000 account and your first trade makes 50 quid profit, that's great, and then you want to go on and try and make more profit, then you have to risk the 50 quid that you've made. So it's how much of their account have they given back along the way to making these profits. So again, for me, it's all well and good, like this one here, Smart Jack. So he's made the second best performer. So he or she has made 73% over the last 12 months, but in clocking up that 73% return along the way, ended up giving back a third of those profits. So it's a level of volatility. That sort of level of volatility isn't really one that I'm comfortable with. So what I'm looking for, ideally, consistently good profits, and also a relatively low drawdown. Let's take a look at the fourth best performer. I know this one anyway because I think this is one that I'm following already on the account. We'll come to that in a second. But if we click on DAX Call 3, we can just drill down and see a bit more information. So let's take a look. Let's bring up the details for this person. So DAX Call 3, member since 14th of August last year, risk score 2, popular trader because of the track record, 550 people following DAX Call 3 on their accounts. Performance since start, 52.4%. So I only started trading with real money back here, back in August last year. So we've got, what's that? Just under 9 months worth of a track record. And then for me, the next important thing, my background is technical analysis and charting, so the next important thing for me is what does the P&L look like? You know, was it all achieved bang in one trade and then nothing was done? Or is there, you know, a consistent trend of the account heading in the right direction? And that's definitely something that we have here with DAX Call 3. You can see, you know, the P&L continues, hit P&L all-time highs for the P&L a week last Friday. It's come off a bit since then, but the trade is still up 52% since they started trading back in August last year. So straight away, that's an interesting one for me. Number of trades, 950, so pretty active. A lot of these people on the platform, you know, are quite short-term focused. So they do tend to do lots of trades. Winning trades, now this is a worry for me. 99.58% of trades have been winners. Now either DAX Call 3 has got a crystal ball and knows where the market's going to go, definitely, before the market actually knows where it's going to go. Or maybe, and this would be my concern, maybe this person has a problem getting rid of losing trades, you know, so might be tempted to hang on to losing trades in the hope they come back, and that can be a very dangerous approach, as I'm sure plenty of us know. So that's a concern for me. Winning months, 90%. Again, that is as well. You know, I like to see maybe 60% of winning months to have a more real-world experience. But again, you know, okay, it's done okay. What's that doing? Last activity. When was the last trade done? A little earlier today, 16th of May, trading real money since December 2016. And this drawdown figure, maximum drawdown, so how much was given back along the way, and only 12%. So it's good. It's apart from the fact that I do think this person could well be hanging on to trades for longer than they need to, you know, it looks to be a good track record. And then we've got to drill down and see a bit more info. So this is the next important thing for me, the month-on-month performance, because it's all well and good, as I said, if somebody makes 70% in a year, but if they made, you know, 60% in 1 month and spent the rest of the year treading water, that's not really a consistent trading performance. So what we want to see are people who can hopefully make money month in and out. And you can see there are definitely a couple of months last year that flatter the performance of this one, DAX Call 3. So started off in August, lost 0.5%, 3.5% September, 3.3 in October. Big month in November, maybe I'm presuming off the back of the moves that we saw in markets following the election of President Trump. You know, we saw some massive rallies that are still going on. I think the S&P today has just hit fresh all-time highs today as well. But clearly making some money riding that there. And then this year, a bit calmer by the looks of it, 2.85, 2.7, 3.8, 1.9, 3.75 so far this month for a return of 16%. So on the face of it, to me, that looks like an interesting trader to follow. But just, you know, just some of the, you know, some of the filters you might want to use. Like I say, the one that I use is a real money trader. That's the first important one. You know, I've got no real interest in following people who are just trading on demo accounts. I want somebody trading with real money. A smooth historical P&L. You know, the shape of the chart is an important one to me. Let's see if we can find something that's a bit more erratic. Here we go. This one here, Save Future. So Save Future, number 10, the 10th best performer with real money, has made 33% return, but has actually had a 38% drawdown. Let's take a look at the chart. It's going to be not particularly pretty. P&L. Oh, there we go. They've only been trading for what looks like a few months. hang on, let's put that in. So you can see, got off to a really sticky start. So again, for me, that's oh, sorry, I'm talking about that and I haven't actually showed you. Let me show you. So this is the one I'm talking about. So Save Future, 33% return, but you can see the shape of the P&L. It's a bit messy. You know, it started off losing a lot in the beginning, and there's the monthly performance. So down nearly 25% in April, up 76% so far this month. That's a lot of volatility. So this one is down here, the 10th best performer. But for me, because of the shape of that P&L, that's not what I'm interested in. So a smooth historical P&L, this healthy profit to drawdown ratio. So you know, it's all well and good making money, but we don't want to see chunks of it given back along the way. You know, I want to have not too much volatility if I'm following them. Low volatility, which all ties in with all of that, and this detailed search lets you refine all of these. So let's flip our way back to that league table. So let me take DAX call 3. So is it? Let's click on. Was it DAX call 3 or DAX call 2? I can't remember. Let's click on DAX call 3 anyway. So here's our trader, and here's the performance. So let's say I decide, okay, I want to follow this trader. I'm not actually sure. Am I following this person already? Because I think this person's got a couple of accounts, and I'm not sure. There's DAX call 3 and DAX call 2. Let me see which one I'm following. Oh, I am following DAX call 3 already. So let me flip over and let's pick someone else. Let's pick the closely related DAX call 2. Here we go. Okay, so DAX call 2, real money trader since August last year. Last activity a few days ago. Winning months 100%. Okay, but maximum drawdown 7%. So let's say I think actually this is a good trader. I want to follow them. So I've got my account set up. I've applied for my account. It's all open, all up and running. If I click on follow, there's a risk warning that comes up. So it says this trader currently has 46 open trades. If you want to, you can have opened on your account the trades that person has, but of course they'll be done at wherever the market's currently trading. So if DAX call 2 bought the Dow 2 days ago when it was 80 points lower than where it is now, your trade will be done on your account, but at wherever the market's trading now. So I never want to have the positions that they've already got. What I want to do is follow any trades that they do in the future. So here we go. So this is my portfolio. So this is the real account that I've been blogging about. You can see there's DAX call 2, who's just been added, and these are 4 other traders who I've been running on the account already, who've managed to turn in a reasonable profit over the last few months. What it does, it shows me down here an idealized view of the performance. So if I could go back in time and follow these people a year ago, the return I made would have been 178%. Wouldn't that be lovely? So that would be the idealized performance. And again, of course, I don't say take it with a pinch of salt, but the future is not going to completely perfectly replicate the past. I picked a trader about 6 weeks ago who spectacularly blew their account up within a few days of me picking them, because I had the risk dialed right down. Didn't do that much damage, but you know, we don't know how their performance is going to be in the future, but this gives us an idealized view. Okay, so we've got these 5 traders. I've got my real account. I'm already following these people's trades. And if I click on DAX call 2 at pair settings, this is where we can really manage the risk. And this for me is a big safety net when it comes to following other traders. You know, I've been sort of using spread betting and CFDs for 20 years now, but it was quite a big leap. I've been doing this for just over a year. It's quite a big leap to start following other traders and to see trades going through on your account that have nothing to do with you. You know, they just sit there and the account just sort of trades away, mimicking whatever trades they're doing. So what we can do is decide how big are we going to follow their trades. Now, if DAX call 2 was the only trader in my portfolio and I choose to follow their trades 1 times, what that means is if they do a trade with a stop loss that means they're risking losing 2% of their account, whatever size their account is, the same trade will be done on my account, risking 2% of my account. So if I had a couple of £1,000 on my account and they're doing a trade that risks losing 2%. The same trade will be done on my account, risking 2% of a couple of thousand quid, which is 40 quid, isn't it? But because I'm following 4 other traders, the risk gets dialed right down. So the risk gets split by a fifth anyway. So my effective risk factor is only 0.2%. So if they do a trade that risks losing 2%, the trade gets done on my account that risks a fifth of that. So it's a fifth of that size. So it really is tiny, tiny sort of size. If I want to follow them, if I'm following 5 traders and I want to do the same level of trades, the same level of risk, I just bump this up to 5 times. And what that means is my effective risk factor now is 1. So that's 1 to 1. So if they do a trade that risks 2%, then the same trade will be done at 2% on my account. But let's say I'm a bit nervous about this one. Let's bump him down, him or her down. Let's bump it right down. So we're only risking a tenth of the size they're risking. If we click on confirm settings, it's done. Okay, I think for all these others, I'm following them because there were only 4 before. I'm following them one by one. So that's it. So now it's really set up and ready to go. Okay, so there's DAX call in there. There's all my other traders. There's the idealized view. And if I hadn't added any traders before and wasn't trading already, there'd be a button here saying start execution. But because this account is up and running, the option I have is to stop execution. Now, if I go to my account, you'll see there's another level of risk control here that gets put in. So these are all the trades that are open on my account at the moment. I've got no idea what they are because I've just been I only check into the account, a couple of days a week. But there are the trades. You can see the size. They're pretty small. I've got open profits of 3p, 8p, 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 and so it goes on, and a few losses in there as well. These are the recently closed positions. So some winners, a loser there on the FTSE, the UK 100. Okay, so these have been some of the trades that have been automatically done and closed today. But there's another level of risk control. So I started off the account with a couple of thousand quid 3 months ago. So now, including open profits, it's what, 2,110. But there's another level of loss protection I can put in. So if I decide, well, okay, I've dialed the risk down for all these people. But what I can do is, if my account balance falls to a certain number, and what I've chosen here is £1,600, then close out all open positions and stop following any new trades. So it really is, I think it's a great way of putting, what is in effect a final backstop on your account, because I think this does, for me, I don't mind a bit of risk, but this does take a bit of getting used to, the idea of following other people and having their trades done automatically with no intervention to you. And I've got a couple of other accounts that I've been running for a year, but this loss protection thing, I think it's a great idea in terms of peace of mind. So if you put 5,000, 10,000, 2,000 in, whatever it is, you can set an absolute pound level where if your account drops to that, bang, get me out. Just close everything and stop following any new trades. And that's it. Once it's done, and you're following all these people, it's really easy to check during the day. I just, if you want to check during the day, you log in up here. I go to my account and I can see straight away a snapshot of what the account looks like, what's the booked profit, what's the unrealized, so the open profit, and what sort of open trades do I have. It really is as straightforward as that. And what I'll do every month, I've been blogging about it on my website. Every month I'll go in and add a new trade. I'm just going to take DAX call 2 out of there, so we'll remove DAX call 2. Okay, that's the one I just added in, and I'll wait a couple of weeks before I add the next one into the account. There we go. And if I want to, of course, I can, if I decide to stop execution now, if I think, well, I'm going to be away for a couple of months, if I maybe think the market is going to change a lot and they're not going to be able to adapt to it as quickly, it's very easy just to click on stop execution now. All the trades will be closed and no new trades will be followed in the future until I decide to start it again. So it's as straightforward as that. I think, like all of these things, it really isn't a license to print money. Don't think we can just find a superstar trader and plug in to follow them, and it's going to turn our trading account into some sort of ATM that's just going to sit there and spew out money, because things do go wrong. You do have traders who go off the boil. We have had markets that have been trending quite strongly. Lots of these traders will be trading the DAX, for example, the German stock market index, and the DAX has had quite a run, like other stock markets, since the US presidential election. But it's also had a lift in the last couple of weeks or so as well. It's finally broken out to all-time highs. So I think if markets get a bit difficult, I think some of the traders will start to suffer. But as long as you've got the risk set right and you've got that ultimate stop loss on your account, I do think it's a really interesting way in gaining additional exposure to markets, but maybe dialing the risk down a little bit. I still trade for myself. I still have done a couple of trades a day on the US stock market, but I think it's a really interesting way of smoothing out maybe some of the volatility and trying to aim for sort of consistent quarterly returns. I'm not too bothered how it performs on a day-by-day basis. I tend to look at it every month, every 2 or 3 months, and decide if a trader needs kicking out. But it's as easy as that. If you have any questions after this, like I say, if you go to the website that I've got, blog page, tradeafter.com, you can see how my account has progressed. Right from, I think it was February I started with this one, from picking the first trader, going through the first couple of weeks, managing the risk. If you have any questions, you want to get in contact, feel free to drop me an email. My email address is david@tradeafter.com, and you can follow me on Twitter. On Twitter, I'm @JonesTheMarkets for market updates and stuff like that during the day. But if you fancy giving it a go, you can open an account. You can start with a demo. I think that's what I did just over a year ago now. I think it was April last year. Started off with a demo account for a month, and it made 15% in a month. But I was following some crazy traders and there was lots of volatility. So with real money, I have a much calmer approach, just to smooth out some of those bumps. But I think it's a really interesting way to trade. It's quite complementary to your own trading. If you don't have time to watch the markets yourself, I think it's a way of gaining some exposure. So if your interest has been piqued by this, I'd say give it a go, because there are always interesting traders to pick from. We'll wrap things up there. So we did just under 25 minutes, so that's good going. Nice short webinar. If you have any questions, feel free to drop me an email. But thanks for coming along, and enjoy the rest of your evening.